Ladies and gentlemen, welcome. We're live. Today on the Fintech Frenzy, it's going to just be a smidge different than usual. As you can see, we have the great and powerful Stephen Fiorillo. I'm just going to face you around because I'm going to be looking, it's going to look like I'm looking at you. And today we're talking about the beautiful PayPal stock. Stephen Fiorillo, if you guys don't know where to find him, you can find him either on Twitter, but he's not really there that often. Mainly where he really posts to is Seeking Alpha. Okay. And on Seeking Alpha, he's posted a PayPal article that's followed up his last one after quite the share drop in the company. If you guys are following the channel, you'll know about it. The stock is down. I think actually today it's hit a new low, correct? Or am I
Probably, I don't know. It keeps going down.
Keeps going down. A small increase today to 53.45. Incredible the difference. I think actually it hit in the 52s at some point today. But regardless, I wanted to talk to Stephen because he's made 6 separate purchases in this stock ever since we first started talking about it. Maybe, I don't know, 3 months ago? Was it even that long ago?
Yeah, I'd say sometime in August.
Yeah.
Most likely that area.
Do you got your mic in front of you, by the
way? Jesus, Tanner. Is that better?
Yes. Yes. Okay. Everyone's going to be happy. Everyone's going to be happy. But so what are you doing, Stephen? Let's talk about it.
All right. I'm just rebuilding because I have too many spreadsheets. I can't find the one that I created. So I'm rebuilding one.
Okay.
So we can share it because I want the updated stuff. So just give me a sec. But yeah, this is perplexing because I guess the market doesn't like companies that make money. I don't know. I mean, I'm down. Are you down?
Yeah, I mean, it's hard not to be down whenever it's breaking new lows. I'm down on the company, but I do think that, like you said, I don't think this is a value trap. I think that there's some people that are quite confused in how much PayPal is actually losing market share, because they are. I do believe that they're losing market share, but within a very fast growing market, which is digital payments and e-commerce.
Okay, so stop real quick. Are they really losing market share if the pie is growing and they increase revenue? I mean, double-edged sword. Maybe they are from a percentage basis, but they're still growing their portion of the pie.
Yes. Yeah.
So it's all how you look at it. I mean, I like companies that make money.
Mm-hmm.
This thing is a free cash flow beast. This thing has minimal debt, a lot of cash on hand, and they could pay off 80-90% of their debt right now if they wanted to. I mean, it's perplexing. That's the only word that is appropriate for this right now.
Well, I wanted to bring up a part in your article that I think was probably the strongest point that you could possibly make, which is since 2016, PayPal has continuously returned capital to shareholders in the most tax-effective way possible through buybacks. PayPal has generated $29 billion in free cash flow since becoming an independent company in July of 2015 and utilized $13 billion for acquisitions and $19 billion for share repurchases. $19 billion. They're planning on doing $2 billion more by the end of this year. So roughly, I think the way you have it broken down is a billion per quarter. One of those would already have been executed. So it shows you the crazy sell-off. If that is the case, if they are doing buybacks, how much the market is discounting this stock right now. But that can lead to great upside if that sort of sentiment changes.
Yeah, it's just weird. Normally, buybacks are a good thing. Normally, insider purchases are a good thing. And did you happen to read some of the comments on the article by any chance?
No, I haven't. Not the comments, no.
All right. I'm not going to call anybody out because I don't like doing that. But there was 1 or 2 comments that really rubbed me the wrong way. And one of them, I understand the premise of it. And they said that along the lines of PayPal has destroyed shareholder value because they have continuously repurchased shares that continue to go down, and it's been a horrible investment in themselves. That's paraphrasing what they said. They're not wrong, but at the same time, from a tax efficiency standpoint, buybacks are the most tax efficient way to return capital to shareholders. It's taxed at a much different rate, and we're not paying that tax. I mean, it's a corporate tax, so we never see. You get a dividend, you pay that tax on it. So,
And
look,
and I think that's also kind of a double-edged sword, because if the stock was still up to its inflated values like it was in 2021, for example, no one would be complaining. But yet
well,
now,
of course not.
when buybacks are even more effective, they're saying that it's a bad choice to do buybacks, even though the lower it goes, the more efficient this style gets of capital allocation. So it's like, in a weird way, as the stock price falls, it's really scary for the people who need the money now, or don't sleep well at night for whenever stock prices decline. But one, they're not diluting shareholders anytime soon, so they're not going to need the capital from their own stock. And two, the repurchasing power gets stronger and stronger.
So let's hit on. So I want to discuss the bear case, if you
Okay.
don't mind,
Yeah.
because it's a legitimate bear case. Let's not make it seem like this thing is going to go up, because it has continuously went down. And the bear case is legitimate. At least what I see is the bear case, which we touched on the other night with Crossroads, that you have a Fed that is in a difficult situation. They could increase again. We don't know if they're going to or not, but Jerome Powell continues to be overly hawkish. If anybody has listened to his actual speeches, especially the most recent one at the New York Economic Club, it was very hawkish. And if they continue to raise rates, or if they stay in an environment where rates are higher for longer, we've seen consumer confidence drop off a cliff. If that translates to a weak Q4 shopping season, that's not good for PayPal, because you would think that the reason I would use PayPal is because I don't want to put my credit card on a website. I would rather just go through PayPal, so I have that intermediary, and my credit card information is not out there. So if the Fed increases and carrying rates on credit cards go up, and they make it even tighter, and if they do push us into a recession where people are losing jobs, that's also not good for PayPal. So there are things that are not rosy right now,
Yeah.
as possible for the future. Now, if that plays out, is a different story. Right now, by the numbers, PayPal looks like a tobacco company. Legitimately looks like a tobacco company.
Well, one of the things that you said, because I do believe in a lot of the PayPal bear cases. I really do. I don't think that they'll be around forever. I think that there are on the actual payment like servicing side, like on the merchant side, I do think that there's better players like Stripe and Adyen, and then on the consumer facing side, I think there's better players like Apple Pay. But that being said, how long until they actually eat away at a company that is still growing every single quarter? And that, I think, it was also in your article of, we don't have to wait too long, like, before they could potentially even just take themselves private. If the share repurchases just keep happening, there's only so much float to go around. So if the stock keeps dropping, it makes that time horizon shorter and shorter.
I mean, at this point, you could go private in the next 10 to 15 years. I mean, not even go private. You could buy every last share at their current rate over the next 10 or 12 years.
Yeah. Yeah.
It's actually crazy.
And you won't need to go fully private before there.
No.
There is a lot of people that will see that float come down. I think one of the things that should keep people so calm is how fast this drop has happened. That means that, this is not completely recognized losses. A lot of the times, whenever you're seeing some overselling, it's because of a short-term sell-off. And I don't know. I'm not as excited as this company for the long-term future of 20 years from now, like I am for a SoFi, but I can't help but buy a good deal.
Yeah, and I said that also, that this is not something I'm going against my normal traditional investing style with PayPal because I'm not buying this for 10 years. Like this is a short to medium term hold for me. I'm looking at PayPal as it is so undervalued right now that when it gets back to where I would consider it fair value or close to it, I'm going to exit. And when we're probably 80% of the way there, I'll probably start writing cover calls on my position
Yeah,
and get out. Like this is not something such as a Palantir or a SoFi that I'm planning on holding past 2030. And it's certainly not a Verizon or an Altria that I'm just holding for the dividend or an Ares Capital.
sure, sure.
So, this is something that I think when the Fed pivots, if you go by the St. Louis Fed and you go by CME Group, because those are probably the two most accurate forecasting tools that we have at our disposal right now, it looks like May-ish is when the Fed is going to pivot.
Sure.
And if that does occur, now obviously that's a long time, anything can happen, but if that occurs and you get a big rally in the NASDAQ, PayPal should rally.
Yeah,
And these prices should look like a steal the same way Meta did at 98.
yeah, yeah. There's one comment in here saying, is this a rates issue or is this quantitative tightening?
I don't know. I don't know.
I do think that that's an interesting thing, though, is that with quantitative tightening, whenever you're talking about Visa, MasterCard, PayPal, they're processing a total amount of just the flowing currency. And so if you're reducing the money supply, it does negatively affect those stocks. It's quite interesting, actually, how much of a hedge those payment companies are to inflation because they're just dealing with the total amount of money that's circulating.
Yeah,
You want me to share that?
bring up my screen.
Well, that's very small, though, Steve.
I'm going to increase it. Hold on. I mean, this is all based off of today. So right now, PayPal.
Can you bring it a little bit bigger, even like 175 or something? Yeah, thank you.
Good. Okay. So right now, PayPal, based on 2023 forward projection of 495, is trading at just under 11 times earnings for 2023. And it's trading at 8.5 times earnings for 2025. That is crazy. Absolutely crazy. And you know what I hate, Tanner? I think you and I have had this conversation. It absolutely infuriates me when people leave comments saying you can't compare PayPal to those other tech companies. You should compare them to Square. That's why you have financial metrics. I can compare PayPal to whatever company is a public company that generates EPS and revenue and EBITDA and free cash flow and has a balance sheet.
Free
A
cash
dollar
flow
is
is
a
free
dollar of
cash flow.
revenue. A dollar is a dollar of earnings. A dollar is a dollar of profit. Any
Yep.
company can be compared to any company. That's why
100%.
EBITDA exists.
Yeah.
And I don't use EBITDA. I don't like EBITDA, but you know what? It takes out all the additional business expenses that vary from company to company. So yes, you can compare different companies from different sectors.
Companies
It's the most
exist to distribute
ridiculous
back to
thing.
shareholders.
It's the most ridiculous thing. But
Yeah.
anyway, when I look at this, I'm seeing a company that's being treated like a communication company such as AT&T or Verizon or Altria Group. Like this is not being treated as a tech company. Certainly not treated as a tech company that's widely profitable. I mean, I should have put Cisco and IBM in here because I'd be willing to bet. Let's pick one of the two. Let's put one of them in. Which one do you want to put in, Cisco or IBM?
I'd like Cisco
We'll do Cisco right now. Let's put Cisco in and see
because
how
they're
this
doing a
is trading.
similar, fast track of buying back shares. Am I correct on that? I don't follow the company, but I think
Yeah, Cisco is a beast at buying back shares.
yeah,
Absolute beast.
compare PayPal to eBay.
That's funny.
Yeah. One thing that I think is also interesting is that the metric that you've shown off about the 13 billion of acquisitions and 19 billion of repurchases, at least whenever we were talking about Dan Schulman, had sort of an indication that they were done acquiring companies, or at least super large acquisitions and acquisition for the sake of growth. They were trying to now actually do things internally with the help of John Kim, and from most recently with their stable coins and buy now pay later, they're seemingly innovating with their own organic designs. That being said, okay, this new CEO kind of puts a wedge in that because we don't know what he's going to do, and historically he has made large acquisitions with MailChimp. Another thing that I wanted to add on that as well is that think about how much that sorry, what was it? What did you say? 32 billion dollars of free cash flow. Wait, that doesn't make any sense. You said they generated 29, distributed 13 and 19. That's
since 2016.
Yeah, but those numbers don't even add up. 13, 19 does not equal 29.
13 toward acquisitions and 19 toward buybacks.
Is 29?
It's 32. I gotta look at. I'm looking at a different screen right now.
Yeah, all good. Anyway, regardless, if for example that might be in today's PayPal over the next 7 years or whatever, we can actually kind of look at this and think, okay, if they do bring back, I don't even know if you want to say it's an even discounted amount of free cash flow, which I don't even think it will be. But there would be much less for acquisitions is what I'm trying to say, and much more on the repurchase side of the thing. And then also because of the discounted amount of or the discounted stock price, it'll buy more shares. like whenever a company is in distribution, like it's at this side of its growth where it's not trying to blitzkrieg growth and gain market share. It's more, okay, how much can we actually make from this company while still growing, but also distribute back to shareholders? This is where it's actually in their benefit to be a cheaper stock price. It doesn't feel good, maybe.
So I probably miswrote it, and I'll probably have to do an edit. It says specifically, since the separation from eBay, they've allocated 19 billion towards share repurchases and 13 billion toward acquisitions, and they've generated 29 billion in free cash flow. So I have all the numbers correct. I got reread and look how I worded it.
Yeah, all good.
But those are the numbers. So we put Cisco in. It is trading like Cisco, which is crazy. Cisco is trading at 13 times 2023 earnings and 12 times 2025 earnings. Cisco has been one of the most hated tech companies. 2.5 decades later, it is still not at its .com era highs. And then you look at free cash flow and take the Splunk acquisition out of it because I don't have the numbers about how that's going to affect everything. But pre-Splunk acquisition, Cisco is a company that's generating $19 billion in free cash flow.
Right.
That's insane that this company's hated that much that they trade at 11 times their free cash flow. I'm going to have to do a follow-up article on Cisco once we get the earnings and how Splunk's going to affect them. They're an amazing company that is grossly undervalued, in my opinion. But PayPal trading at 16.
Can I compare the two just really quickly?
On what metric?
No, I'm not bashing on your position here. I just want to show off how even more beneficial PayPal might even be in this trade. Obviously, Cisco has the track record of doing this for some time. Maybe PayPal needs to gain that. But if we look at analyst estimates over 2024, 2025, and 2026, sales year over year are expected to grow 1 to maybe 3% on the high end, and EPS about 4 to 5% over these next couple of years. If we look at PayPal, that is going to be about 8 to 9% on the high end for revenue, and then 12 to 20% on the EPS side is what analysts are expecting right now. So it still is a much more of a growth play as well than potentially some of the
Yeah, I
other
mean,
positions.
PayPal has 28.5% EPS growth over the next 2 years, and Cisco has 10%. I mean, Cisco's not growing nearly as much. Cisco's an older company, but they generate a ton of profit and they buy back
Sure.
a ton of shares. But for PayPal, the question for me is, and why I've been buying shares, and I'm not buying one or two, is it undervalued? And if the markets turn, is this going to be a play that people jump into because they think that they're going to be able to make a buck? And I normally don't invest like this. This is a trade for me, a longer term trade.
Yeah.
Because I
Yeah.
think that psychologically, a lot of people are not going to be surprised if PayPal trades over 100. I mean, I don't think there's a sticker shock there. I mean, why is PayPal trading at a lower valuation than Coca-Cola or Pepsi?
Can I bring up one more thing about the what is Cisco's dividend?
3.5%.
Okay, so yeah, okay, 3.5%. Actually, why don't I find total shareholder yield? Give me one
It's
sec.
2.95%. They pay $1.56 a share.
Gotcha. And buyback yield right now is less than 2%, 1.95%. For PayPal, it's like near 9% right now. It's crazy. So which would make up for both the dividend and like there is signs even on a value side. Like this is deep value positions that you could compare this to and still see, potential great growth here. I think it's getting to silliness, and the fact that this has been so short term and hasn't been in this area, like one thing that scares me, Steve, about is something like a Citigroup, for example, that you may love, is that it's been down there for so many years that you never know when it's going to recover, right?
Okay, now Citigroup is my number one value play.
Sure.
The reason is it continuously grows its book value. Its book value is at $98, and it has only gone up. It continues to go up, and every quarter somebody says, "Well, what about maybe they have if they have bad assets to be marked down, or eventually they pop." They're not popping yet. They still aren't, and it is even if their assets got re-rated to $65, it's still a double. Like it
No,
just doesn't, and I'm getting paid 5% to wait. So I'm fine getting paid 5% to wait on a bank that's not going anywhere. But from a value perspective, maybe PayPal needs to pay a dividend at this point. And if they're projected to generate 495 this year, 565 next year, and 636 in 2025 of EPS, pay a $2 dividend. Get it over with. A $2 dividend at these prices and lower the buybacks, which I don't know if it's a great idea or not. Maybe you could bring in a whole new crowd of investors. And if you pay a $2 dividend on these prices, that's going to be a 3.74% yield.
I just find
And
that
that's less than
whenever
50% of the EPS. And they have basically no debt. Their debt is not even a factor in the dividend argument because they can pay all their dividend, or they can pay around 90% of their debt in cash right now. So they're not a levered company.
the one thing that I would say though is I find, and maybe this is just from my experience, which is minimal, right? I don't have nearly as much experience as some of the, older people that have been investing their whole lives. But I find that whenever a company cuts their buybacks, there is an absolute pullback in the stock. People hate that, but it's not nearly like whenever a company cuts their dividend. I find dividend investors leave an exodus.
I mean, can PayPal really pull back any further than it already has? I mean, if they were to pull back part of the buyback and didn't have a good reason, that would be one thing. But I think if they say, hey, you know what? We've bought back so many shares already that we're going to take that annual allocation and we're going to reward shareholders. Half that allocation goes toward buybacks, half of it goes toward the dividend. I don't think that the market would have a bad reaction to that because they're still returning the same amount of capital to shareholders. And investors are going to get some of it in their pocket and some of it in their shares representing more of the company.
Yeah.
And now you bring in a dividend crowd that may start buying the shares. You may get increased volume, may see more buying. I mean, nothing has worked right now, so it's not the worst idea in the world.
But it's there was this massive real problem for PayPal, which things did get worse. Transactional margins have decreased. And if they keep decreasing, the problem's only going to get deeper. So it's not like there's no problems here. But I do believe that they do have a timeline that I hope they stick to. And I hope that Alex Chris will give us some real light into maybe what Dan Schulman hasn't been telling us. So Q3 will be a big switch. And I think there are real catalysts that for the longest time just haven't existed.
And look, we don't have the numbers. And you and I have said this at least 3 times on these shows that the transactional margins and the transactional volume, those are real issues. They're sticky issues. But at the same time, for all, this is not 1 or 2 analysts. I mean, I believe 44 analysts for both 2023 and 2024 showing these EPS numbers. I mean, it is, yeah, I would prefer buybacks over dividends too. It's just maybe dividend brings in a new crowd, even if it's just a 1% dividend. But there's a lot of analysts that are projecting EPS growth year over year. So we need to see what this new CEO is going to do and how they're going to drive everything. But if you believe that the American economy is going to continue to be strong, if you believe that GDP is going to continue to increase and we're going to avoid a recession, I mean, you would think PayPal is going to do good.
Yeah. Yeah. No, and I don't know. There's so many things that's on PayPal's side, regardless of strong competition. Like the movement over to e-commerce is still very strong. They're seeing significant numbers. They said this on the last earnings call. They said even just early in July, we saw massive number. And let me actually give you guys a sneak peek really quickly.
Have you ever looked into how big e-commerce is in the US?
Have I looked into
Have I showed you it or not?
What exactly do you mean?
How big of percentage of retail e-commerce is versus physical?
Oh, I think it's 15% or something. 85% of payments are offline still.
I'm going to bring up the chart. It's not my chart. It's a real share right now. You're close. You're close. You are close. I will tell you that.
And by the way, both Shopify and Block have put out separate surveys this year talking about strong holiday seasons. So I don't know. That right there leads to like 12+% of e-commerce in all of America as well.
So share my screen. And this may look familiar to you because this is from a Shopify site. I got this from one of their e-marketing companies that they use.
Gotcha.
And there's an updated one. This is from October 2021. There is an updated one. I just don't know what article I put it in, but the numbers are very similar. But e-commerce is not a large percentage of US total retail. And US total retail is expected to grow every year over year, and so is e-commerce. And it goes back to that pie. Even if PayPal's pie is shrinking on a percentage basis, they may still be able to grow revenue because the e-commerce entire landscape is going to continue to grow. And for something like this is bullish for Amazon. This is bullish for Shopify. This is bullish for PayPal. This is bullish for a lot of different companies because we haven't even seen it to think. And I live in a very densely populated area, and all I see is package deliveries all the time. And to think that we're not even at 20%, it's crazy.
Yeah. No, it's super exciting, and that's why I've just been really into the whole idea of payments and e-commerce, is because the growth is absolutely there. And I know just because of my age mainly, I don't want to go and shop in store for something that I can buy online. Like maybe I'm a little too introverted for that or whatever, but there's options. The service is the same. Sorry?
Did you get your cup?
No, I'm not a writer.
No, you didn't get a cup?
No cup, no cup.
Hmm.
I'll have to send some people some emails.
You're gonna have to do something.
Yeah, yeah. But
But you are correct, and I'm gonna say that pre-pandemic, my wife and I were like, somebody said to us that they were ordering a lot of stuff off of Amazon. We were like, what are you doing? Just go to the store. Now, oh my God, I will order everything I possibly can to avoid going somewhere because it comes the next day. It's amazing.
yeah, yeah. No, and even people, whenever they think about PayPal, and this is something that we've talked about countlessly, but they think about PayPal checkout and their percentage there. What people don't often think about is Braintree, which is the back end process that helps with, you know, Uber's payments and Microsoft's payments and all of these things. But with that brand, you're hearing from Stripe executives, from Adyen executives, from all these other payment people saying, we're seeing Braintree show up to these sales cycles now whenever they were not in these big client conferences at all. And now they're here and they're actually taking a big percentage of the clients now because of how cheap their service actually is. And the reason why it can be cheap is the same reason why they're beating out on buy now, pay later, is because they don't have to exclusively rely on those contracts because they have bundling. Because if you can say, oh, Uber, you can use payments with us and we'll give it at such a low rate for you, much cheaper than any other provider, but PayPal checkout has to be at the top of the list. No problem. No problem. You guys have the most amount of customers anyway, so it's going to return great percentages for Uber and Microsoft and all these ones. And it also allows them to continue to strengthen relationships that if we didn't have that, we like Apple doesn't have that. Adyen and Stripe don't have the checkout side. We have all these other things. Like, people don't talk about the smaller products that are growing really fast. PayPal has a product called ChargeHound that just actually worked with Uber, where it's the payout side of the business. So, or sorry, no, I'm getting my businesses confused. That's for disputes. It's Hyperwallet. Sorry, Hyperwallet is another product of theirs where it leads to paying out people. So PayPal paying you. And why would they need that? Well, they need that for platforms like Uber, like YouTube paying out creators, all of these things. Having both ways on that payment system is actually more complicated than people think, but PayPal solved it. And I don't know, it's still a very growing or very fast growing industry. They're a legacy name in a very new and exciting arena. And I think that the price is way overreacting.
So let me ask you a few things. One, do you know what your average price per share is right now?
Not down to the penny. I think it's something like
Around.
$65 now.
Okay. So I'm at, and I put in the article, I'm not looking at it. I'm just over 60. It's like
Mhm.
60 and a half or something like that. And I'm planning on making a purchase this week that I think will bring it down to maybe even a little lower now. I'm going to try to get to like 58 and a half.
Yeah.
At what point do you pull the plug and say, you know what, I freaking lost? Because I'll tell you, I'm still in Alibaba and I'm not willing to meet defeat yet on that one.
Well, I need to see an earnings result. I think if we get through 2023 and I don't hear I think a lot of it will be on Alex Chris if I think that demand's believable and has strong integrity in what I
Say
think.
earnings are okay and stock still stays here.
And transactional margins, if transactional margins turn around at all, if it
Let's
goes
just
up by
say nothing
20,
really changes. Like, is there a share price that makes you say,
no,
I'm no longer doubling down, I am getting out?
no, literally no. The stock price could go down to $5 billion market cap, and then I have to wait a year for them to buy up all the shares. With a company that is making free cash flow at the rate that they are, the lower kind of leads me to think that there's a faster buyback scheme. Now, like a 9% buyback yield is extremely high for any style of investing, especially ones that
Yeah.
I've been involved in. This is, I'm not too worried, honestly.
So that's the way I'm looking at it. If the future does not have lowered free cash flow And if they continue to put up these numbers, and if the market still sells it off, there is not a number that would shake me out. Now, if earnings next week do not go well and the forecast for 2024 changes at
Yeah.
all, I would have to really consider what I want to do.
I think
Next
higher
week's
for
going to be
longer
very
will
interesting.
impact it negatively. Because I don't think in Q2 that sentiment was out yet.
No, we haven't seen it.
You know,
This stock
and
is just perplexing. I mean, just I can't get over the fact that it's trading where Altria is on all these metrics. It's crazy.
Altria.
Yeah, U.S. Marlboro cigarettes,
Yeah, yeah, yeah.
Altria
But
Group.
I thought we were talking about PayPal. What are you talking about?
No, no, PayPal's trading at the same valuation as Altria Group.
Oh,
Like
okay.
it's turned
Sorry, I
around a
missed that.
tobacco company.
Yeah, yeah,
Like,
yeah.
I can't believe it. It is crazy. And the crazier thing to me is nobody wants to acquire this company. That's the even crazier thing. You know, you're seeing consolidation continue in oil and gas. Not only is Exxon buying, why is it escaping me? Whatever company they're freaking buying, I completely forgot. But Chevron came out today and they're acquiring Hess or Pioneer Natural Resources.
I think the problem is like I think about all the potential buyers because PayPal's freaking huge.
I can think of four real quick:
Go ahead.
Visa, MasterCard, Apple, Google.
Okay, all of those have antitrust problems right now. And so if
No,
Visa or
there's only
Master,
one of them that has an antitrust problem. That's
no,
Google. Only
okay,
one.
okay. But you're talking about
Only one.
legitimate.
You can't show me how Apple has an antitrust, please.
Okay, but listen. You're talking about pre-acquiring PayPal. What I'm saying is PayPal is under investigation right now for having like a overcharging problem on their merchants, charging way too high and pushing out consumers. That's happening right now. Apple had the same thing very recently with Apple Pay, and now they're going to double up and have Apple Pay be ran on Braintree and push out all like. I don't think that any of the big names, Visa, MasterCard, which are all going through problems on swipe fees and too high fees to merchants. I find payments is kind of under that microscope more strongly than a lot of industries. And so for one to acquire another would be much more scrutinized than a tobacco company or something like this. I don't think that's unfair to say.
It may not be unfair to say, but the definition of antitrust and what a monopoly actually is doesn't, and I guess I'd have to look into it more, but I don't see how any of those companies acquiring PayPal would create a monopoly. I mean, Visa and MasterCard, I don't even think you can consider them a duopoly because you do have American Express, Discover. I mean, there's other companies in there.
Yeah. Isn't it if they are potentially pushing out consumer or competition or I'm losing the word there like unfairly curtailing other payment providers. And one of the things that I was just reading about when the Berman, I forget all these names. I need to look it up because I don't have the notes for that in front of me. But was that you can't as a merchant say, hey, can you please choose this payment provider over this one because these are the fees. They have to be that's why whenever there's MasterCard and Visa and all those ones that are offered, everyone knows on the back end sort of that Amex charges a pretty high rate, but they can't say that at all during the transaction. They have to be sort of flat out. And it's not the industry it's not regulators that have created that. It's the industry standard. And so it's Amex and Visa and PayPal that have said, you better keep your mouth shut or else you're not dealing with us. And that could be a potential legal problem. I don't know.
Yeah, I don't know. I don't see it as, I'm also not a lawyer, so my opinion doesn't matter. I just don't see
Yeah.
it as something that hurts consumers the same way I don't see Amazon being a monopoly. Like, to me, that is just the craziest thing. That could be the craziest thing that I've heard, is that Amazon is a monopoly, for the simple fact that Walmart generates more revenue than Amazon, period. They do. Amazon is not even the largest commerce company in America. Now, they're the largest commerce platform, but their platform allows small businesses to reach a nationwide consumer segment. Without that platform, they would be selling in their local areas. Now, also, consumers don't have to only use Amazon. They can use Walmart's online, they can use Target's, they can use eBay.
But you know,
There's
they
a
would reach a much lower audience.
but I'm just saying, it's not like Amazon's the only game in town.
Yeah.
And they also are not a monopoly in cloud. Azure is gaining on them. They have 32% of cloud. That's not a monopoly.
Yeah.
It's
No,
just it's crazy.
I get it, and I think that I don't think that Visa, MasterCard, or any of these are problems right now. I think that they're problems if there's large acquisitions. Like, I think no one would be excited if Visa and MasterCard would come together. You know what I mean?
Oh,
But
that would never happen.
but
The FTC would never let that happen.
PayPal is just because the stock is dropping doesn't mean they don't have 430 million users. 430
Right.
million users. They are a giant in payments.
But that's why I think that they would be a attractive acquisition from one of these other companies, only because you're getting such a great value for their customer base and their free cash flow and their balance sheet. I mean, it's a deal that finances itself.
Yeah, no, absolutely, absolutely. And I think that I think there's potential for institutional buyers to come in, but I don't actually know if there will be an acquisition, at least from a large, company that might be in a similar arena. Like, I just don't know who would touch it, and yeah, it just scares me a little bit.
Yeah, I mean, I'm very interested for
But PayPal can buy themselves.
and they have been buying themselves.
Yeah.
I mean, that's one of the most intriguing aspects of it is that they've repurchased $19 billion worth of shares. They got 2 billion in the cannon right now. They've probably been buying this quarter. And next year they should buy back more. I mean, this is a company that every year since 2016 has continuously repurchased shares.
Yeah.
And they are going to continue to do so, hopefully. I mean, if they don't utilize that free cash flow in that area, I mean, this is not a levered company that has debt repayments coming up that are crazy that's going to eat into it. What do they do with the money? There's only 3 things they can do: acquisitions, well, 4 things: acquisitions, organic new product and marketing behind it, dividend or buyback. Those are your only options.
Yeah. No, and excuse me, I think that even people write off Venmo's growth lately because it's slowed. But I still think that that's the future as new products get made. There's, the large banks are not innovating nearly as quickly as the Cash Apps and the Venmos and these sorts, and the SoFis of the world. And I do think that more consumers are going to be piling that way to get the benefits and the high APYs. And like, for example, one thing, and I don't know if I just misread it or whatever, you had written in this actually something about Venmo. Let me see if I can find it.
I probably didn't.
I
don't think I mentioned Venmo one bit in the article.
Okay, well, I'm going to read it because I see it right here.
Okay.
Part of the bull case was that PayPal and PayPal through Venmo would grow its ability to raise prices incrementally. I didn't understand that. Because
where is it?
The bear case for PayPal is evolving as a macroeconomic environment has changed. That
Okay.
segment.
Hold on.
Because I just want to bring up as well, because people give me one sec. There we go. I want people to know how the payment structure as well. Like people say that transaction margins are decreasing as if this is some sort of sign of weakness for PayPal. And to be honest, in some regards it is. Okay. A lot of it also has to do with other parts of their business that offer lower transaction margins are winning so much faster than PayPal checkout. And so it's actually causing their transaction margins to go down. To understand this, Braintree charges fees very similarly to, here, wait, give me one quick second. I just needed to change that. Braintree charges similar payments to Stripe and Adyen. They have 2 different fees. They can either choose exactly what those guys are doing, 2.9% plus 30 cents per transaction. That's pretty standard across the board. They have another one where it's like 2.5% plus 49 cents, or for bigger transactions, it works better for the merchant. But the main thing is PayPal checkout, which charges 3.49%, much larger than any of the others, plus 40 cents per transaction. It's absolutely huge. But with that, you get the PayPal brand, which means the authentication rates are some of the highest in the payment industry. The problem is those two are all right. Braintree is a little bit lower than PayPal checkout, so already we're getting transaction margin compression. Venmo came out with like the lowest transactions I've ever seen, 1.9% plus 10 cents. It's like a third, maybe a little bit more than what PayPal checkout is Venmo's. And this is another reason why you see on Amazon.com, Amazon does not accept PayPal, but they will accept Venmo. It's because it's just way cheaper for them. And whenever you're dealing and bringing in, billions, if not trillions and trillions of dollars, you want the lowest rates. Amazon can ask for the lowest. And so that's why they accept Venmo.
Yeah, and the reason I put that in there is because PayPal does have the ability to incrementally increase that 10 cent to 11 cent or 12 cent in the future.
Sure.
And tier it up. They could go to 11 cents, nobody would bat an eye. 6 months later, they go to 12 cents. I mean, there's room where they can increase that, and it's still going to be under the competition, so people aren't going to stop using it.
They could nearly, bring it up 100 basis points. It would still be under the competition. Like, it's crazy how much lower it is. And whenever you're talking, like you said, with dealing in this much money, the take rate is important. Like that can lead to a massive increase for some businesses.
I mean, look, a lot's going to depend on the economy too. Nobody knows what's going to happen. And I can make a case for a great 2024 or a horrible 2024, and I don't know which one's going to play out. I know which side I'm leaning to. But anybody who follows any of the stuff that's going on can make a reasonable argument either way. And if the Fed does pivot, and if we do avoid a recession, and if unemployment does not increase, we should see GDP continue to grow. I mean, when they pivot, that's going to mean that the credit card rates on the credit cards carrying costs are going to come down. It's going to mean mortgage rates are going to come down. When the housing market becomes unfrozen, then you have people that are going to be selling and buying homes. People that are buying homes are going to be buying items for those homes. I mean, you can make a case for either one. Now, the scary part is if the Fed does decide, you know what, price stability is the more important side of our dual mandate rather than full employment. That's going to be very negative, I think. So we're going to have to wait and see. Unfortunately, I do think a lot of it is in the Fed's hands. And look, if they do create an environment where equities become more attractive, look, getting 5.5% or 5.4% on a 12-month bond risk-free is enticing to investors, especially with the global conflicts that are happening right now in an uncertain macroeconomic environment. So people are hiding out in bonds. There's over $5 trillion in money market accounts per Bank of America. So at some point, when I know people that are doing CD ladders, I did a CD ladder. I mean, when you do a CD ladder, you are typically going 3, 6, 9, 12 months, maybe even out to 2 years. And you have cash rolling over every 3 months. That's the idea of a bond ladder or a CD ladder. So when the Fed starts cutting and those rates that you're getting now no longer exist, investors are going to then come to the realization, I'm either going to lock my money up risk-free at a lower rate than I was getting, or I'm going to go back into equities. And I think if the Fed does cut and decide, you know what, maybe 2% is a little aggressive, maybe we're okay at 2.5%, 3%, not saying they're going to do that, You may see money flow in from the sideline. If you get $1 trillion flown in from the sideline, you're going to see a bull market rally.
Right. Yeah.
So that's something else that's on the table that is you're going to have to wait and see how it plays out. But it's a very uncertain time. It go either way.
Even guys, just look at, I wanted to add this. I know it's small, it's more the product side, but website traffic to PayPal has seen some pretty great growth in the last quarter as well, much higher than the quarter previously. I did put up a poll in the chat. If we got 160 people here and less than 30 votes on the thing, do you use PayPal as an app, as a checkout? I'd love to know. Please vote. Vote honestly. Even if you are an investor in the stock and you don't actually use the app, please say no, because I'd love to know honestly. I do my part, okay? I've been using PayPal whenever I can. And in fact, I've actually used it in weird ways. I've used PayPal through Google Pay, which is weird. I don't even know why that integration exists, but I've used it because I'm pretty sure PayPal takes some sort of percent in that transaction. So I thought, hey, I'll give them the money.
Yeah, I support a couple of people through Patreon, and I do it all through PayPal.
Yeah, okay. Do you have any automatic bills set up? Like, how often do you use it or no?
I may have Hulu on there. I don't know. I gotta say.
Gotcha.
Other than that, no.
Yeah, I think that there's I don't know, a lot of great things are coming to payments, and I think, like, for example, I don't know if you guys know this, but PayPal as an option to take payments, even as like a small creator, is so much more useful than taking payments even through Patreon or through YouTube, for example. The take rates can be as high as 30%. Patreon, I think, is a little bit more lenient. I think they take 12%. PayPal would take 3%. You know what I mean? And so that difference in take rates is really important to.
I would expand on that. That people that have been using PayPal on the business side for years and years are not necessarily going to go blow up their business model and switch to something that's new to them. I mean, if they have faith in PayPal, why switch? I mean,
No, switching away from it, you mean?
Yeah.
Yeah.
I think there's not much of a reason for people who have had success with it for taking payments for their businesses to switch away. Same way people don't switch away from the Square units.
Sure. Yeah. Yeah. No, I think Shopify CEO recently was on the All In podcast during the summit that they did recently, and he was talking about how people think that this is a sort of a sector that's done with its innovation, and he doesn't think so at all. He thinks there's so many new things that could be created in payments, and if there's anyone that sees lots of payments, it's Toby Lucky. So
his story is very interesting.
Canadian through and through.
It makes me want to buy shares in the company, but
join the dark side. Come over.
No, I can't do it. Maybe one day.
Maybe one day. One day, whenever you got your headset on, we're in the VR doing a podcast together, and maybe you're shopping for something, and then you see a nice couch, and then maybe you can use artificial or augmented
you're
reality.
saying it like a joke. I do think VR is going to be a big thing.
I'm not saying it like a joke at all.
Okay.
Dude, 100%. I think that Shopify is using a system where they can allow you to do spatial commerce and see things in your house. You want to buy a plant online, see how it would look on your coffee table.
Yeah, there's a couple of interesting things like that I've seen.
And then check out with PayPal. And I think all those things are coming. And one thing that I really like about the metaverse, and I'm not like ultra bullish on it in the near term, I think it's still got years to go. But one thing is there's no cash in the metaverse. It's 100% digital, baby. And
sports and events.
Sure.
That's what's going to drive it. And my prediction has been for the past 2 years that you're going to see the stadiums outfitted with VR cameras, and you're going to see season virtual passes or sell tickets virtually, because why watch a game on your TV if you can watch the entire thing in VR from different vantage points and pick if you want to be behind the basket, on the sideline, up on a skybox. I mean, it is going to be pretty cool.
Yeah, no, I'm 100% in that field. I think that And I think that a lot of the same payment rails will exist whenever this happens. Visa, MasterCard, Shopify, maybe some Cash App Pay. Maybe Steve doesn't want to hear it. They're growing pretty quick.
You know my feeling on that. I'm not knocking their growth, and I'm not knocking how big they are. They are
I
a
know,
huge
I know.
company. They
I play
generate a
more than
ton of
anything. I know
revenue.
that.
It's just that they have a problem monetizing their revenue, and their C-suite is being rewarded for losing money. It's crazy. Now, can
Uh,
they turn it around? Who knows? Probably, but they're not at the moment.
so 60 people have voted. It's been 7 minutes. I'm going to wait just a little bit longer. But Steve, I'd like to take or ask you. We'll do it right at the end of the show. That'll be in 4.5 minutes.
Right.
What percentage of this audience do you think uses PayPal? And only 6 people have voted. So please, if you're in YouTube, if you're on your mobile phone, if you're I mean, it's a little harder if you're on the TV, but I'm sure not 100 of you are on the YouTube TV.
How many people voted?
64 right now. 65. Keep voting, people. And honestly, just vote honestly.
65%.
That's 60% right now.
Okay.
We'll see. We'll see how it unfolds. Anything else on PayPal? Because obviously your article is huge and we've only spoken on a couple of the points.
Yeah, I think people really need to understand that there's a real bear case. And I tried my best to outline the bear case on this because I don't think enough people have outlined the bear case for PayPal. So I really tried to take an unbiased approach toward it and outline that there are some very serious risks to it. For me, the underlying fundamentals outweigh those risks. I don't think Jerome Powell really wants to push us into a recession. I mean, maybe that's the optimist in me. I just don't think he wants to do that to the country. We'll see what happens.
Yeah. Yeah. I try to cover the bear case as well. I think that I'd like to hope that people think that I'm not trying to just be one-sided on this stock. But with it, my optimism does not come from this, a company that I think is losing the strength that it had in its brand name years and years ago, back in the day. But the stock price has also kind of reflected that as well. like what you've shown in your article. What is it? How many years has it been? 6 years, 5 years, something like this? Since it's hit this price?
Lowest point since like August 2017, sometime in 2017.
And
maybe October. It's crazy. It doesn't make any sense.
And
that's not necessarily the way to look at it. I think the bigger way to look at it is you're not even valuing PayPal as a boring consumer staple company.
Well, I think the one thing, and someone said it in the comments about how I feel about that as well, is that Coca-Cola will be around in 20 years. PayPal might not be around in 20 years. And it could be, but I do think that they, unless things change, and Alex Chris could be that guy, who knows, but I think they are losing in the checkout side. 60% of the audience is using it, let's say. But as we skew younger demographics, it's much more Apple Pay, Venmo, Cash App, and these sorts of things. It definitely skews more towards those newer style ones.
Yeah,
and
did Apple do something where they're allowing PayPal to be integrated into Apple Pay?
Just for the debit and credit cards, but that's not, like, I find most people that use PayPal are not actually using it through their cards. They're using it through the actual checkout system itself. So they might select PayPal checkout and then select their Visa card through their bank. Who knows? But Tanner, am I counting Venmo and PayPal as the same thing in the vote? I guess I wasn't. I guess I was just counting PayPal as the regular branded checkout.
You gotta count both. They're both a PayPal product.
Sure. Then vote twice if you, because I'm sure there's a little bit of overlap on people that use both. But personally, I try to use PayPal whenever I can. Do I find it much different than some of the other options that I have here? Like, like I use Google Wallet as well, which is Google Pay. They just renamed it. And there's like weird things that I feel like would not be technical problems, but there's no wall of activity to just show me every transaction I've made with all of my payments, like PayPal has. Like, it's so easy to see everything that's been charged, and I can just scroll it like a Twitter feed. I don't get why that doesn't exist in Google Wallet. It makes no sense. I don't know how much of a technical difficulty that is, but I find that their system is so just like, hey, pay with this card. It's not actually a finance app. And I don't even have the digital wallet side of PayPal. What you guys have in America is such a different product than what we have in Canada for PayPal. You guys have APYs and debit cards and credit cards and all these extra things that just simply don't exist for Canada for PayPal. Like, I can only use the checkout side.
Why did I think SoFi earnings were Tuesday? They're Monday.
Monday, yeah. Are you going to be joining me that morning?
I don't know, maybe. Gotta look at my calendar. Maybe I'll take the day off.
Because just so everyone's aware, and then we'll end it here, that I don't think Amit will be there. He's in Vegas. I think Tevis might be joining really late because he'll be getting off an airplane at that time. So he'll be like joining us in an Uber, and it'll just be me practically. So I'm trying to get a crew together, sort of like a second team of Avengers. I need my B team. So I got Chris Hager, I think, is joining us. I'd love for Steve to join us. Potentially Roy might be joining us. I don't know. I haven't even asked him.
I'll see what's going on with work. If I don't have any meetings I can't move, I'll take the day off. Otherwise, I can't do it. We'll see.
Gotcha.
Are we on for Friday to make predictions?
Yes. Yes. I am putting out a prediction video, like I think probably Wednesday. But I'll do it again.
Okay.
Ladies and gentlemen, thank you so much for watching. If you guys don't know or haven't seen Steve before, please check him out on Seeking Alpha. Check his Twitter out. There is his right there, @Dividend Streams. He'll let you know when his next article is out. He doesn't really use the app aside from that, though.
No, I don't really use the app. Yeah, just follow me on Seeking Alpha. You'll see all my stuff come out.
There you go. Thank you all so much for watching. Bye for now.